Good morning, everyone, and welcome to Piper Academy. This is the morning market report, also known as 102.7 WBTC. That's what I mean. I'm telling you, I'm going to start a radio station. Guys, we are getting a little rejection off of the 200-day now, right there. This is coming in on the backside here of the PPI data this morning. Now, mind you, it came in at 0%. Big old goose egg. Yes, I did, username. You are correct. But one thing that I want to point out is that we had a major revision, and so a lot of people not looking at those numbers as they really are. So, or they are, and now they're selling it off. So it's not bullish. Let me tell you that. Also, guys, we got some job numbers. You guys recall back? We talked about job numbers way back when, and I said something's amiss here, and then everyone else finally caught up to the economic read, right? Well, I'm seeing some more stuff. Matter of fact, this time not alone on it. Some other people caught it too, but I found a pretty interesting breakdown on job numbers. We're going to talk about that. We're in trouble. We're recessionary wise, economy wise, we're in trouble, and that's why you're seeing all of this sell off happening like this, guys. It's the recessionary fears, and it's taking its hold. But we're going to break it all down. We're going to show you guys where we might get some support for a bounce if you're looking for a good trade. Might be onto that. But as of right now, guys, we are looking pretty red on the market open today. On the hourly in the red, daily a little bit mixed. We did have a little bit of hopium up to that resistance level, and then it pulled back. We're going to be breaking down all of that and more, plus CZ and his very cryptic warning that he issued out last time, 53% drop. Will we see that again? I don't know. Let's break it all down right here on the morning market report. Let's get it. Classes in session. Good morning, everyone. Welcome to the morning market report. Shout out to everybody that's in the chat right now. Let's see here. We got Al Jr.'s in here with us. He's giving the wave. Roman Braves in here. Alexander G, the mod queen in here with us. Trade Intuition. T.I. Joe in the house. Username. Yes, you are an ass, but we all love you. Lost on Crypto is in here with us right now. Who else we got? We got our username RS Miller, and I think the whole Otter gang is about to come over here. Yeah, Harp, I see you. Ninja Glock was in here early this morning, dropping his like buttons and giving us good morning and hellos. If you're just joining us over here, this is the morning market report where we break down the economy, the charts, the technical analysis, everything you need to have knowledge, because knowledge is profit. But I do not do this show by myself. I have a great co-host who helps me do all of this chart analysis, and that is the OC guy. Let's go ahead and bring him up here. OC, what's up, dude? How you doing today, man?
No, not much. Just enjoying myself. Today is a good morning. We'll see what the news are right there, because I mean, we're talking about that right at the beginning of the show or before the show started, and things are not looking good. I mean, things are getting scary. Although I do have seen another news that where whales are moving a lot of USDC to Binance into Coinbase to maybe start buying some crypto. Maybe, I don't know. Things are looking strange, but we'll see, maybe.
Yeah, absolutely. Shout out to Alex O Crypto. He said, boom, here, I'll give you that.
Boom shakalaka!
Alex O Crypto has just entered the building and 4x'd our viewers. So, you know, hey, I can't 4x my account right now because it's going down, but I can definitely 4x the viewers just by having a good brother like Alex O Crypto. Appreciate you, man. Let's go ahead and just get into this info today, guys. We got a lot to break down. We got PPI data, shady job numbers from the federal government. Shock. There's the O face. There you go. Someone's going to screenshot that. I know they are. And then also, I want to break down what's going on with the actual chart. So I'm going to first start off. We're going to jump right into some Bitcoin TA first, and then where we are in the 4-hour, and then we're going to come back and break down all that news. Let's jump into that Bitcoin chart and just show you guys what's going on here. Right now, we are getting a rejection. We tried to break that 200 one last time this morning. Let's put this on a 4-hour. You'll see it there even better. The 200 doesn't come all the way over, because it's a daily. This is a 200-day simple moving average. And so if you take a look at that, what's going on there with that, it's just been our rejection going all the way back here to March 9th. So we cannot get through this. for anything, I am thinking that if we do get a continuation rejection down, we'll at least come down and do a liquidity sweep to about 80,000. Nice psychological number would be a nice liquidity sweep to grab the liquidity there before it tries to go up again. But if we break right through that and slices through it like a hot knife in butter, we're probably heading right back down here to the 300-day simple moving average, folks. And that also is going to be in range with the Bitcoin's last stand here. This is built off of this volume node that is coming in here on the fixed range volume profile going back to November of 2024. So, yeah, that's, guys, it's not looking too strong right now, but we're going to break down all the reasons why. Oh, let me count the reasons why over here on the news side. Let's get into that. There we go. Checking out the news here, guys. First of all, right now, we are sitting at a 31.1% risk indicator. Social metrics are way down. Price is way down. So it's giving us 31.1%, brought to us by Into The Cryptoverse. Looking here, guys, at the crypto market cap, we're now below 2.7 trillion. It's at 2.666 trillion. Somebody either buy or sell. Let's get that number changed out there. The trend line for the total market cap valuation, its average mean, is coming in at 3.571 trillion. We are currently 25.34% undervalued in the entire crypto space. Bitcoin right now, its risk metrics are sitting at 48, which would make that a 3x there on the it means what? Oh, does it? Is that what it means? Okay, cool. I don't hit women though. I don't even know what you're talking about over here. Anyway, guys, 48% there is what we're looking at on the risk band. That's a 3x on the DCA schedule. Looking at dominance right now for Bitcoin. Bitcoin with stables is at 61.12%. Without stables, it's at 66.67%. So we do have a nice deviation there between the stables and without stables for dominance. That is indicating to us that Bitcoin dominance is dropping or is moving into the stable coins and not so much the altcoins. Okay, so a lot of people putting their money into USDT, USDC, DAI, stuff like that. So let's go check out that fear and greed index, see what it's looking like for us today, guys. Fear and greed right now is coming in at 45, so we're sitting at neutral. Some of that fear has resided, but the price has not changed much since then. So interesting to see that right there. Let's go check out X and see what I have on X. Is there anything on X that I want to talk about right now first before I get into the other stuff? That's all the PPI. That's job numbers data. We can talk about this. Ethereum right now, guys. Ethereum is sitting mostly in longs, 75% longs on this massive sell-off. I don't know about you, but historically, when I see 75% of all of the trade entries on centralized exchanges are sitting in longs on Binance, Bybit, OKX, so on and so forth, that's usually not when it goes up. It usually goes down. So according to OC guy, FETH, yes, we know you hate your Ethereum. But yeah, guys, I don't think that we're going to see us pump with that many long set there. It's just not going to go around and make that happen. So we'll come back and check out X marks the spot in a bit. Let's go check out the crypto bubbles. Look at the current prices. Bitcoin coming in right now at 81,931, down 1% on the daily. Ethereum down 0.7% on the daily. The last hour pulled back another 1.5%, sitting at $1,878. Still thinking that we see a $1,200 Ethereum coming to us, coming soon to a chart near you. Also, there is some major liquidation threats coming in on Ethereum if we hit 1167, I believe it is. The Ethereum Foundation is actually looking at a liquidation on their ETH. So be aware of that too. XRP is up on the daily 5.3, getting a little pullback in the past hour here at $2.31. BNB is up 5.5%. Solana down 1.1% on the daily, 1.9 on the hourly at 100, just under 125. Let's see, any other big movers here? Some green and Doge, Tron, Pi Network, Leo token, but all giving it back on the hourly here. Stellar Lumens, wow, look at that, up 12.6%, moving up 2 spots to number 13. That is a big mover today, is Stellar Lumens, guys. Chainlink, very far off from $600, down 1.5% on the daily, 2.1% on the hourly. HBAR, Hedera, down 2.7%, losing 2 spots to number 15. And then rounding out the top 5, we got Avalanche, Shiba Inu, Sui, Toncoin, and Litecoin. The only one that is up out of these is Toncoin on the daily, and everything else here. Oh, Avalanche is up 0.3%. Everything else here kind of on that daily. All right, let's go check out the TradFi side. Let's give this a refresh and see how the Dow Jones, S&P, and the NASDAQ is looking. Dow Jones currently right now down about 0.2%, continuing to have more sell-off. It is dropping like crazy. S&P 500 down about 0.5% there, about 0.47 now, and the NASDAQ down a full 1%. Russell 2K closing out, but the VIX is slowing down, guys. The volatility index is getting closer to 20, and anything below 20 is a good spot, in my opinion. As long as that volatility is high, it's a trader's market, not an investor's market, and you've got to use stop losses. You don't even want to swing trade. Oh, now it's going back in the green. You don't even want to be swing trading when that VIX is high. You want to stick to your slap those likes, gang. I like that. You want to keep if that volatility index is above 20, you want to keep your trades into scalping, and you want your scalping to be set with very strong stop losses. And that is why Alex O Crypto is the king of that. You guys need to check him out. If you don't, most of you are from his show, but if you haven't checked him out, go check him out. He is the king of risk management and scalping. So let's go over here and check out. Oh, I want to check out the bonds. What are the bonds doing? 10 years going up. That's not a good thing. Why? Because we want to see that come down, or they are going to force a recession on us. We talked about this on Crypto Coin Mindset. I banged the drum here on the show. For those that are not watching, there's a lot of people in here right now. The reason that the 10-year yield matters is because our debt in the U.S. is going to come due, and it's either going to mature, saying, hey, you owe this, or we're going to have to refinance it and move that due date out, right? You do not want to refinance when the rates are this high. Remember, we had our last loans when we were at 0% interest rate, which we set up for a decade plus. Now we're looking at having to refi at 4%, and that's going to be even more interest on our debt. So I do believe that if this does not come down on its own, we are very likely going to be looking at a forced recession, really, and in all reality. But not like it was, the factors weren't already there, but they got to have a way to bring this down, and the quickest way to do that, recession. So shout out to everyone that is just joining us in here in the show. Hope you guys got that. I didn't understand what I was trying to say there. Gold back up, moving towards back to $3,000 at $29.61 after getting a bounce at about $2,900 there. In oil, lastly, staying above that $60 threshold. That's the danger mark for oil, but right now it is down a little bit today, 66.89. Let's go talk about PPI data and explain all of this. So PPI came out this morning. If you guys don't know, this is producer price inflation. This is how much does it cost for producers and manufacturers to get their goods to make new goods, right? So producer prices in the U.S. were unchanged in February from January 2025. Okay, we'll leave it at that, and we'll talk about the numbers here because it came in 0. That means it was unchanged, right? It came in at 0.6. Guys, this was 0.4. You can see that right there. Previously revised from 0.4. That means that we went from 0.4 to 0.6, but they report the number as 0 because it was 0.6 last month, not the 0.4 they originally reported. Therefore, while it says unchanged, it's really a 0.2% from what they did report, and it was higher. That was even higher than the 0.5 previously because they went from a 0.3 to a 0.5 the previous month. Last month, they put it out at 0.4, which we now find out was a 0.6, and this month we're unchanged. So while this looks like, hey, look, inflation didn't change, we're good, not in reality. If you come over here and take a look, it's all the way down here. This is what people are seeing. Look, that February is all the way down there, 0. Look at this one back here. It's all the way there. No, it's no change. This one is actually sitting at 0.6 also. So yeah, PPI data, that while they come out with this and look, hey, look, it's going to be at 0.3%. It came in at 0. We're better. No, you have more revised numbers there. And so core PPI, same deal. This was came in at 0.5. Now it was 0.3. So that went up 0.2 tenths of a percent. That was supposed to be 0.3 to 0.2, came in negative. Guys, the numbers are all whack, and everyone knows this. They're putting out numbers that look decent. In all reality, they're just on top of other bad numbers. And so when you have revisions on top of revisions on top of revisions, you're not going to get people to buy the hype. And so, yeah, economic data came out this morning. Job numbers, jobless claims. We're getting ready to go break down into job numbers here in a little bit, but I want to get into some charts for you guys before we do that. Jobless claims 4-week average was revised. This was 224,500. 224.5K jobs that were filed for unemployment last week, right? That was actually revised upwards by another 0.25K. So 2,500 more jobs, jobless claims last week than what they originally reported, revised up also. And now we came in at 226. Well, yes, it is below the 228. It is still much higher than what it was supposed to be. So what it was last week, especially when you throw in the revision, and we'll probably get another revision next week. So there you go. Jobs. This is what we're going to talk about. U.S. layoffs are surging at a recessionary pace. The job numbers that we got in the past couple of weeks, all lies, and more lies. But OC, let's get into some charts right now. I want to talk about what we're seeing over there, and then I also want to get back to these job numbers here in a bit, because right now Bitcoin, getting that little pullback, I do have some hopium. I do think that $85,000 is going to be hit, possibly as high as 89. I'm going to show the reason why on that in just a second. But how are you feeling overall in the markets? What's your bias right now? Is your sentiment more bullish or more bearish right now? You're muted. You're muted. It's like an 80s sitcom. It's a catchphrase.
Oh, yes. I was eating crunchy waffles, so that's why I was muted. So, yes, there you go. In the meantime, try not to get caught on the camera. But we need to understand that we are bearish, right? So I cannot say that my sentiment at this point, it is bullish, because I need to stay grounded, especially because I am a sentimental trader, right? So, but my actual feeling, it is that I do feel a little bit more bullish than last week, and that is because I also think that we need to start hitting some 80-something, 85, 87-ish points, even if we are on a dead downtrend, right? If we don't hit those, I think we're going to be going much, much, much lower at the 73 mark, 70-ish mark that we've been talking about, and that for me, it is the point of no return. In fact, for me, just touching the 76 was basically just scratching the point of no return. So we'll see how that plays out. But so far, I do expect a little bit of a movement to the upside, but we are bearish. Daily bearish, 4-hour bearish. Yeah. I mean, so mostly
the weekly is super bearish, man.
Yeah, man. Oh, by the way, I just was looking at the numbers here, and I mean, if you ask Piper, what is 3 plus 3, right? Most likely you're gonna be saying 6, right?
6.
If you ask the mathematician, what is a 3 plus 3? Well, 6. If you ask a physicist, 3 plus 3, 6. U.S. government, 3 plus 3, 4, but we need to revise that. Right?
Right? No. What is 6 plus 6? Unchanged, 0. Because if unchanged, we were really up 0.2%, but putting us at 6. Guys, that's not saying that our current inflation is this much. If we had no increase of inflation, right, at all, we would actually just stay static. It would be 0 all the time. But when you have a 0.6 that comes in, and then the inflation comes in at 0 the next month, you still are at that 0.6 increase of the previous month before that, and that all stacks. So every time you guys see 0.1, 0.2, 0.6, 0.1, 0.2, you have to add all those together for your annual inflation rate. So yeah, it's pretty ugly. So what is 6 plus 6? 0 when you come to the federal government. There you go. It's horrible. Nice. All right, OC. Let's take a quick. Yeah. Go ahead.
And I mean, just to wrap it up, I think that we're going into a recessionary section here. I'm not saying that we're going to be jumping into a recession fully, but what I think is happening here is that a recession is just a normal part of the fiat cycle, right? We need to understand that there's no other way around, right? Piper have talked about it, but you cannot go into politics and say, hey, we're going to a recession. We're going to, F most of our population for a little bit. So hold on in there, right? That's not going to be popular. So what I think they're doing, it is all right. We have a very bad number. So it's just like a plane going down with no fuel. So what they do is not to crash nose dive in, they pull up hard. So when they're going down, they kind of like stabilize for a little bit and then they keep going downward. So kind of like trying to do for that soft landing. And I think that's what they're doing, trying to, like not to show it off too badly as it is. And they can soft land into that depression or that recession, better say. So yeah,
I definitely don't think we're going to have a depression, but I do think we have a pretty hard recession on the forefront. I think it comes around August, and we'll talk about that why. That reason here in a minute. Shout out to everybody in the chat right now. I appreciate you guys all being here. If you haven't done so yet, smash that like button. Help us out. We are trying to grow and catch up to Alex O Crypto. That man's got short legs, but he's the fastest growing mover in the crypto space, man. So much love to you, bro. Let's go check out this weekly chart here on Bitcoin, and then we'll come back. Let OC give a couple of rundowns on our most popular altcoins, and then we'll come back and talk about those job numbers, guys. Looking at the weekly here on Bitcoin, I've got my multi-oscillator setup going over here with RSI, MACD normalized, and the Oscillator Pro. You can see right now we are stuck between the 300-day and the 200-day simple moving averages, 300-day being our support, resistance being the 200-day. If we break that, guys, it's this level here that I'm watching, and there's a fixed range volume profile in here, point of control that is going to be key in that area. Let me just come over here and grab that fixed range volume profile. We'll pull it from down here, and we'll just show you guys what that looks like. You have a value area high if you pull it from there, coming right in that area. That's coming in right about 63,000. But if you bring this over to our last big retest that we had down here of consolidation, right there in that same range, $67,000 is going to be your point of control. Looking here at our oscillators, what I'm seeing on the weekly, which is kind of giving us this longer term look at what we have here, we could see some pumps. We do have a fair value gap coming in right here on the price action. So looking at that area, we could see a pump back up to about $80,000. I do have an alert set at 93 because if we break that, then obviously, because that's this volume node, right? We got a nice volume node that's going to tell me if we get a rejection there. Be a key point, in my opinion, for some take profit or even a short entry. But right now, looking at the MACD normalized histogram continuing to push down red candles, and they're not getting this light color where you start to see a bounce at all yet. It's not giving us indication of a bottoming here. The signal line still spreading out and pointing to the downside there on that also. So this is, in my opinion, still has some room to run on the MACD normalized on price, which is why I am more bearish bias right now than I am bullish bias. Plus, if we look here at the Oscillator Pro, we had the top signal back here. We had another liquidity sweep that grabbed it, and then we created another divergence there as we were coming down. So the downtrend arrow, VWAP overbought had fired on us, and now we're moving in. If you take a look over here, you'll see this yellow line right here and how that turns into red. That is money flow. So weekly money flow is in the red also. Money is leaving the market. We are in a downtrend. Volume is super low. And the RSI here, you guys see this long candle? These are set up on Heikenashis. When you start to get these wicks, it means you might turn around. That was this stall that we had at the 300-day. But right now, we're now getting a full body candle body extension, and typically when that happens, that means you get more downside that plays out here, just like we saw back here. So on the weekly time frame, guys, still looking bearish, and I do not think that the bottom is in based on just this alone. I'm sorry to say that, but I think that we do have a bit lower to go. So let's go ahead and jump over to UOC. Let's see what you're looking at on your top altcoins there, and then we'll come back and we'll go over these job numbers. What you got for us?
Absolutely. Let me get started with something here that we haven't looked at for a long time, and that's going to be JTO. So what are we looking at JTO at this point? Because I believe that we could be finding some bottoms in here. Remember, this is highly reactive, and this will be moving with Bitcoin. So if Bitcoin dumps, this thing is going to be dumping on you very hard. But so far, look at this. We're having, and let me reverse this, because guys, also remember, when you're kind of looking at the charts, try to break the same pattern that you already are looking at, right? If you have not noticed, my head is kind of twisted. I don't know. So when I do that, what is it, TikTok filter that you swap it, that's when you notice it, right? So the same thing I do here. Let's just take off logarithmic and then also just invert the chart. Where is the inversion here? There we go, invert the scale. So what I want to show you guys here is when we are inverting this, look at what happened when we have a rounded top, right? We kind of like go down. So isn't this looking like this in here, like a rounded top? And what am I inverting this chart? And that is because on Bitcoin, let me see if I get Bitcoin here. Yep, we are more used to seeing this rounding over, right? So this is what we have been living our bread and butter for the last couple of months, right? So just looking at the same thing on maybe another coin will bring some more sense of what we're expecting and looking for, right? So this in here is telling me that I could be going downwards where, well, to my dynamic reactor, and maybe based on in previous experience, kind of like a fake out a little bit lower before I keep moving to the upside, right? So let's invert it back up again, right? So invert scale. This is telling me that I could be going up maybe as high as some other lows in here or some other highs, and I will be calling previous highs, maybe here, so somewhere around this area, right? Maybe I will over exaggerate this calculation, right? Or this yeah, that calculation. So maybe we could be looking at something like that for the run up, right? Why am I pushing for that movement here? We have a very high consolidation score. Are we consolidating? Yes, this is telling me highly consolidation, right? But also the last number is our unicorn number, number 10 in here, which means we are at the end of the consolidation. What happens after 10? Going back to 0, which means no consolidation. And no consolidation means moving. Where to? We don't know, but we have not yet lost this low in here. Look at that. We touch it here. We've been hovering over it. And most importantly, we have a triple divergence, a quadruple bullish divergence, and we are making that push through. Last time we have a quadruple divergence and we made that push through. Look at what happened. All right, so I'm getting ready to maybe jump into a possible long position. Let me show you where, somewhere around here, right? And I'm going to be setting up my alert, and I'm going to be aiming for long position. Stop loss is going to be right below my wick, giving it a little bit of a wiggle room right like that, and then aiming to my dynamic reactor. As always, we're going to set up a couple of taking profits. So TP number 1, early profits, and this is because everything is bearish. We're going to be trying to get it at this area right here where we have a previous order block, or where I believe that we have an order block, right? Let me see if I can cut it here, right, somewhere around here, TP1, and then maybe let's push through TP number 2 at the previous highs in here, and of course, let's just give us some hope at previous stops somewhere around here, TP number 3. As always, use your support and resistances. But look at that. We are pairing very nicely on support and resistances. Maybe I'll be willing to change my TP somewhere around here. But so far, I'd rather take early profits at this kind of moments. All right. So let's see if we have an order block. Yeah, look at that. Looking for that order block. And we have a bunch of resistance. Most of them are bullish. Therefore, we are going to be expecting a sharp pullback, maybe possible re-entry before we take the next one, sharp pullback, and then finally taking over in the best case scenario. All right, so just keep your eyes peeled for this one. We could be having a good entry right there. Very quick, Ethereum, but we keep tracking it, and it kind of is refusing to follow up on what we're telling it to do. So I was expecting it to kind of start either ranging up or trying to break through, because I was looking for a FOR, flip of the ribbon. At this point, we are right below the 0 line. We are not moving. This is not looking good for Ethereum. If we are hitting the 0 line, and look at that, we are supposed to be breaking that range already, right? Or at least going to the 9 area here. So we still have a chance, but time, it's running out on Ethereum, all right? So Ethereum, you better move, man. If not, we're going to be seeing you back in lower lows. And how low could it go? Well, then we have a supporting here. So maybe 1,766. I'm not going to be giving an entry here. Yeah, because we need to have our eyes peeled. I would say between the next two candles, if we're not pushing through, I don't think that we're going to, right? So if you really want to trade Ethereum, well, then you can go for that. Yeah, bad joke. I know. I need to stop that. We need to set an entry somewhere around here, and then maybe aiming on the previous lows or previous highs, as we have seen with our support and resistance. Oh, where are you? Oh, where are my support? There we go. Sorry, predictive ranges. There we go. Somewhere around those areas. And I know it's getting a little bit messy. Let me try to clean it up. And we have a huge order blocking here. Let me show you. There we go. So last chance. If you want to jump in, be careful with Ethereum. I think I'm going to be going for this. So I'm going to add an alert. And remember, when this alerts plays out, oh, I see I'm on logarithmic. Perfect. When this alert plays out, I'm going to be looking for an entry. I'm going to be reanalyzing this one. Other than that, I do have a couple of others at the top, but let me try it back to you, Piper, and then do the round robin.
Sounds great. Yeah, we have to start asking the question, when does XRP flip Ethereum?
I don't know. Let's ask Alex on crypto.
I saw this post on X yesterday, and it said, at this point, no token has to pump at all in order to overtake Ethereum. Ethereum's just going to fall down to let them pass. So, yeah, they're in a race, and then, whatever it is that takes its place, it just stops running, and then Ethereum runs backwards and puts them in the lead. That's what's going on there on that dominance. It's pretty crazy. Let's go check out the job numbers stuff, that data that came in, guys, and what I was able to dig around and find, because I want to talk about that, and it really has to do with the PPI data that came out today. Kabisi Letter put some stuff out on that. Let's talk about that data, what the so what is, and then get into why we're seeing the job numbers look the way that they look. Well, actually, not the way that they look, because what they're showing is not what's actually being reported, or not what's actually in the report. So, breaking February PPI, we just talked about this. The PPI inflation fell below expectations. Both CPI yesterday and PPI today fell more than expected in February. Inflation is cooling again. That's the narrative that the Fed is showing you, right? But let's go down and see what he says here. The question becomes, why is inflation cooling in the midst of a trade war? Tariffs are everywhere. We just got another threat from Trump today on the EU about putting a I think it was like 200% tariff on wine and champagne from Europe. So if you're a wine drinker, you might want to stock up. So likely due to the expectations of a slower economy. Guys, when you get a slower economy, you typically slow down production, okay, which means demand drops, which means inflation starts to show lower, right? Plus, if your production is slowing down and you don't need to produce as much because of a slower economy, you typically see job losses start to build up. And so now that leads us into what we're actually talking about here is the job numbers. And so let me bring this back out of this post, and let's go talk about these job numbers, because here, looking at the bookmarks, there we go. Yesterday I put this out, and let's walk you through how I got to this. I put out the number of people not in the labor force who want a job spiked to 414,000 to 5.9 million people, the highest since October 2021. As a percentage of employment, this metric increased to 3.6%, in line with what we saw in the 2008 financial crisis. 600,000 Americans became unemployed in February. That is not the job numbers that we got. So where does these numbers come from? Kabisi Letter did a pretty decent breakdown, and then I'll show you the report that I found also that is kind of in line with a little bit different numbers, but still saying the same story. Kabisi Letter said something does not add up here. The difference between non-farm payrolls, which is what we got reported, and the household survey. The household survey goes out and says, hey, OC, do you have a job? Yes. Hey, Rick, do you have a job? Yes, right? That's the household survey, right? And so that would be that him and I have 2 jobs, okay? That's it. Even though OC might work 3 jobs to make ends meet, and I work 2 jobs to show ends meet, and that would actually show that we have 5 jobs on the report, right? On the other report. So the Friday's job report showed 151,000 non-farm payrolls were added in February. Meanwhile, 588,000 Americans lost their jobs last month, the second highest drop since the 2020 pandemic. According to the household survey, that's the see the disconnect in the data here, guys. The household survey is a closely followed metric as it only counts workers once, even if they have multiple jobs. All while 385,000 people left the labor force last month, suggesting Americans' confidence about the labor market is deteriorating. What's happening here? And then let's go over and check out this report that I found. Where are you? Report. There we go. And guys, I'm sorry about the brightness of this. If I put this on to like one of the other colors, I guess I can do this one. This one might be okay. We'll see what this looks like. This is better, I guess. U.S. layoffs are surging at a recessionary pace right now. February job report showed a lot of labor market weakness. The Bureau of Labor Statistics, the BLS, or the BS, as B and OC refer to it, estimates the U.S. economy created 151,000 jobs in February, according to a report that was released last Friday on March 7th. This was slightly below Wall Street's expectations of 157,000. The unemployment rate rose by 0.1% to 4.1%, above its estimate of 4%. They thought it would be neutral. Notably, the jobless rate, not seasonally adjusted, picked up to 4.5%. That's the highest since September 2021. Okay, so a lot more jobless claims coming in. Additionally, January job numbers were revised down by 18,000 to plus 125,000. Overall, non-farm payrolls have been revised down 10 out of the past 13 months. Okay. Nevertheless, it does not really matter, as we will have to wait until August to see what the actual magnitude of revisions we should really expect for this data. More explanations about these adjustments can be found in previous labor market articles, and I went and read a bunch of it. It's all behind a paywall, though, so I had to go and pull some from like Scribed and stuff like that. Let's jump back and talk about what this means. So if you guys remember last August, we had the job report that came out and said, hey, 818,000 jobs don't actually exist that we said existed, right? And then we had to wait until February when we got the final version of that, and it was about 546,000 jobs. So it overshot in August, but it was still over 500,000 jobs that they reported existed, did not actually exist. We're starting to see this build up again, and as of right now, it looks like it's about 600,000 jobs, and we're going to get that report in August. That is going to be your preliminary job revisions report put out annually by the Bureau of Labor Statistics, and then the final version comes out again in March of 2025, February 2025, in that window. So right now, it's looking like we're heading towards that massive number again that we got last August that dropped the markets like crazy at probably one of the worst times for us to see it, because we've already got economic slowdown fears, we've got inflation fears, tariff fears, all the stuff that's causing these market sell-offs. And when you tie in on top of that, that the labor market is actually much weaker than what they are reporting, because they're reporting, hey, look, there's all of these jobs that were picked up and people are working. No, a lot of those were people picking up multiple jobs because shit's too expensive. So, and in order to make ends meet, they've got to pick up 2-3 jobs or work, Uber in the evenings after they put the kids to bed, on top of their 2 jobs they work during the daytime. So we are seeing some numbers that are not false numbers. They're absolutely true numbers, but the perspective of them is absolutely skewed onto what they actually mean. So yeah, just because we picked up a bunch of jobs, we're actually seeing that a lot of people lost jobs and other people had to pick up even more jobs. Or it might be even the case of, hey, my wife lost her job, or my husband lost his job, and I've got to pick up an extra job because right now there's not a whole lot of offerings for her to find a decent paying job or him to find a decent paying job. And why pay for daycare for a job that barely makes ends meet? I can go work 2 jobs. They can stay at home, raise the kid. It cuts down on costs there. So that's what we're seeing on the job numbers, guys. And it's not adding up again. So last time I told you guys this, we started to see 2 months later, 3 months later, the cracks in the labor market, and it's got really nasty. And I'm telling you this again, the numbers are not adding up. Something's amiss here, and it's getting ready to get even worse for us on top of an already bad economy. So when I'm asked why and how can I be a bear, This is how, because the data's out there. And if you stop at, no, I do not have a husband, Dave Digital. I was given an example of generalized people. Not every time it's the wife that goes and quits working to take care of the kids. Sometimes dads do that. We can be stay-at-home parents too. So, Dave Digital, this guy. So yeah, that is what I'm seeing here in the job numbers. OC, your thoughts on this, man? Because look, when I say, hey, look, we added, 1 million jobs this month, but if it's 1 million people took on a second job, did we really grow the labor force, or did we just, did everybody just pick up an extra job to be able to afford eggs? What are your thoughts?
I think you're right on spot. And let me just bash again onto government, right? Not only U.S. government. I know we talked about it. Why? Because this is the most important country in the world at this point, right? So that's why we use it as an example, as a guidance for the rest of the world. Because if U.S. goes into a recessionary period, I think we all gonna go and suffer and see those consequences, right? So having said that, let me be clear that this is the same thing happening here in Mexico. I believe politicians set and go speak to their analyst and say, hey, do you like your job? All right. Do you want to become part of the unemployment, metrics? And of course, you're going to say no, right? All right. Well, then I need you to finagle whatever you can, right? For me to have a tool to show that we are not going as bad as we should, right? So why would they? I mean, that's why I raise the question. Why would they only count once that jobs on per person, and then count the jobs per gain or loss, right? That is incomplete data. That is incomplete data or biased data. Maybe I be falling into a pit of ignorance. That is a possibility. I also need to understand that I might not be understanding something that might be running out of my scope, right? But so far, that seems like there is a tool, right? There is a tool for them to either show or not show, and to say, hey, we're doing great, although we're not doing that great here, we're doing great in here, so we're not that bad, right? So I think, and let me repeat myself, after last year, remember last year we were talking about soft landing, right? And we talked about narrative. So I will be following whatever narrative they tell me to, because that's how the market's going to be moving.
Yep.
Remember those job observations, right? Well, then pumped, or even if that was 6 in reality. So they're, trying to get us or manipulate as much data as they can to, and I'm not saying that that's bad, right? Because if they just go full panic, we could get a much worse reaction. So are they just saving us from ourselves?
Controlled descent. It's a controlled descent.
Exactly. Yes, exactly.
Trey Fly knows all about that. Controlled descent.
Exactly. So that's my thoughts. I mean, I'm sure this is manipulated. I'm going to keep following narrative until I see otherwise on the charts, right? Because the charts, I'm going to be moving through narrative. Yep. That's what
I want to clarify. It's not really manipulated. It's selective. That's what it is, because they're putting out the data that they get, right? And then it's always a secondary and tertiary revisions, right? It's initial reporting, and then, okay, we fine tune the numbers, right? They don't have it right up front, which they would if they, went on blockchain. But I'm just saying. So what we're seeing is not really manipulation. They're just selectively leaving out info to the average American investor, right? Hey guys, look, these job numbers were added. Were they added? Absolutely, they were. But they're not telling you that, well, according to the household survey, most people lost their jobs and took on a second job, or stuff like that. So they're not giving you this information versus this information equals this. They're just giving you the one that looks the best. So it's like meeting that girl that's like perfect, and then you're like, this is the one, and then you meet her kid, and he's a 13-year-old thug punk that thinks that he's walks on water and pisses ginger ale. You one with the other. If I had known that you had this, no, this is not a personal true story, just so you know. I love my kids. Matter of fact, you guys are going to have ZTS Rhythm back while we're in Vegas for Bitcoin conference. ZTS Rhythm is going to be staying home with Gypsy the dog. He's going to be puppy sitting during that week. And he's going to be running the live stream from right here. So you guys will see and hear ZTS Rhythm. He's going to host the live stream so we can all dial in and not have to need the bandwidth at the hotel for that. So he is going to be he's going to be back here running that. And I've already told him that because he works in the food services. So look, things might get ugly. If you lose your job, don't worry. I've always got a job at the Piper Academy for you. So you guys might get them back even more. Who knows? But yeah, OC, I want to go talk about Solana. Let's jump back over to the charts. And then I do have one last article I want to get to before we leave today. So let's go check out this chart and then we'll come back, check out what you're seeing there on maybe some other top movers. But right now I'm looking at Solana, guys. We did get this breakdown. I got this fib that I've had on here for a long time. These fibs are based on low to high to lows, okay? Or low to high, I should say. And right now we are retracing back to the golden pocket. I've had this green box on here for a support zone for a very long time. It's coming back from this volume node that we have back here on the fixed range volume profile from the very bottom. And we are almost back there. Matter of fact, we were all the way up here above $200, around 220 when I called for this target down here and everyone thought I was nuts. So looking at what we have here, we had a bounce on the golden pocket, but now we're starting to get that curved top. As you know, OC talked about the curved bottom, curved top. We're getting this rounded top here, look a lot like my dome. That is looking like we're going to come back in to test this golden pocket. That would put us right into that zone there, guys. I'm looking for us to come down about $106 to $100, no joke, on Solana, and that's what I'm seeing there on that chart. Matter of fact, if we jump over and we take a look here at the oscillator, you'll see it does have the money flow coming back up, but it's starting to get a little curvature there, little curve on the tip there. Go ahead and run with that one, Buck. I know you want to. While we're getting this bounce up, but we're almost back up to the 70% mark, and so it's about time for that oscillator line to start to curve over to align with that money flow. So if Bitcoin starts to go down, guys, looking at a $100 Solana, that's what I'm seeing there. OC, what are you watching on your charts? We'll come back, do this article, talk about that, and get the hell out. Send people somewhere. Well, I was trying to send him to Crypto Blood, but it doesn't look like he's got his video posted yet. What do you got for us, man?
Absolutely. Let's finish off with outcomes that I have here planned for today to take a look at. So OM is playing out as we were expecting. Look at that breakout continuation, going to take the dynamic reactor. Dynamic reactor is kind of like moving away from it, and we're building up a goose heading here. If you did not enter right down here, be careful. This is not the time to re-enter. If you did enter right down here or at the breakout, be careful because this could be coming back for a little bit before doing the secondary top and then coming back down. That is what a goose can usually do. So remember, like for example, in here, we come back down, we do a secondary top, and then we move backwards or downwards here. We come back down, we do a secondary top, and then we move downwards here, depending on the goose head nose. So basically, if we have a pointy nose, that means that the secondary high could be even higher, all right? If we have a down point, pointing down nose, well, then that means that most likely we're going to have a lower high. So just be careful there. You can still maybe move, or you can start moving your stop to entry and then and then just leaving it to see how that plays out. If you haven't now take profits, this is a great time to do so, all right? So not financial advice, just saying. 4 hours on Binance. Binance basically making that move, reaching out all the way over here. It seems like we also wanted to do a goose head here, and as Piper says, whatever get wicked, it gets candles. So I do expect a couple of candles going back up to the dynamic reactor. I think this is news driven. Why? Because on the news that I was looking at, it seems like Donald Trump, what is it? Trump, it's an industry, man. Whatever Trump they have going on, they were in talking with Binance, and also CC was looking for a presidential pardon. So maybe we could be seeing some, news-driven movements. Maybe we'll have to see. But so far, a possible goose head, secondary touch to the dynamic reactor incoming. Link having a bottoming pattern here. Possible Wyckoff pattern coming down, little range V-shaped recovery, high not higher than the previous range. and we are breaking through the zero line. If we break through the zero line, most likely we're going to do a secondary move to the upside, going back to retest, and then we do the little range before, I would say, breaking, retesting, and then taking this high. So be careful, because we are not on the third wake of movement. And for me, remember, first one, second one, oh yeah, we're in the third one. Third one is a charm, and possibly the last one. So I retract myself on that. You already have taken Sol, and then ADA holding out right there. The steep downwards movement did not happen. Actually, it actually reversed on us, right? We had that flip of the river right there, and we are right above the dynamic reactor. I believe that we're going to be making a secondary or third touch on this trend line. This could be your entry point. So let me just move my entry point alert somewhere around here. Continue anyways. Oh, I see logarithmic. So that is going to be it for ADA. So far, that's what I got. And let me just show you what I was looking at here. Breaking. Oh, sorry. My bad. $719 million USDC, sorry, not dollars, has just been transferred to Coinbase. Are whales getting ready to pump the markets? We'll see. Maybe that will be a whale search bounce to the upside on Bitcoin, right? Maybe somewhere around 87, to slowly start pushing that volume, not to move that much the price of Bitcoin. Other than that, turn it back to you, Piper.
Dave Digital says, I love OC's translation. Get millionaire or die trying. Do you know there's a song, an album by 50 Cent, Get Rich or Die Trying, and there's a movie. You know how like in Bollywood in India, they have like the movies of America that they remake in Bollywood, and they have like one-off names and stuff like that. We're going to do a Mexican version of Get Rich or Die Trying, and we're going to call it Get Millionaire or Die Trying. So there you go. We're going to fund it all the Piper Academy. budget $1,000 in Mexico. Here we go. Let's go over here, take a look at what I've got here on the news side. This is the thumbnail this morning, guys. It was about CZ giving a cryptic warning. Shout out to Titan of Crypto right there behind my back. He's the one that put this out. Yeah, CZ back in March 16th of 2021 posted, don't buy high and sell low. Okay. And that was right before we had a 53% pullback in the market. He just did it yesterday, 2 days ago on March 11th. Almost right before midnight, so almost yesterday, put out a tweet and said, don't buy high and sell low. Again, right? Whole new tweet. Guys, a 53% pullback would be $51,000. Is he trying to give us a warning here? I don't know, but it is pretty cryptic to put out the same exact tweet at the same exact time, 4 years later, right before a big possible dump is coming. So that was the thumbnail story today. Not clickbait. It actually happened. And then let's talk about this, because right now we keep getting a lot of bullish information, right? Institutional adoption, state adoption, like all the fundamentals for Bitcoin to be bullish are present right now. But the reality is we're in a bearish reality, and that's the clown market is baffling the experts, right? And I should quote the experts, not the clown market. But let's see what they're saying in this article. Crypto markets are down again today, with total capitalization falling back to 2.8 trillion. It's actually below that now. It's at 2.666, which is exactly where it was in March 2024, long before the most pro-crypto administration in history was in the White House. On March 13th, Chainlink community liaison Zach Rhines described it as the most bizarre clown market he's ever seen in crypto. We've just seen the most bullish catalyst in history of crypto in a single month, but the spooky macro conditions, that's that economy stuff, jobs, inflation, tariffs, all that, are suppressing positive market reactions. He observed that the U.S. government has shifted from being adamantly hostile against crypto to being not just neutral, but openly pro-crypto. Yet still, markets have tanked 26% or $1 trillion since their peak 2 months ago. Bear market fears are returning. This is coming along despite the clear rules and regulations that's coming for stablecoins and market structure, enabling institutions to start engaging in the industry in a way that's meaningful and strengthening their place. But, we had this whole big thing here about the digital asset stockpile. But when you look at the macro side, the crypto market outlook, the downtrend that began in late January has continued. Bitcoin has actually gained marginally in the past 12 hours, tapping $84,000, which is the 200-day simple moving average. average, and it's given us that rejection. That's why we look at the chart still despite everything. And Ethereum has been annihilated. There's a word for you to use, OC. Ethereum, it got annihilated, sinking to bear market lows and failing to reclaim that $2,000 mark. So when you look at what we have going on, we should be pumping hard right now. Bitcoin and crypto space should absolutely be moonshotting. And so a lot of experts are baffled because especially people that got stuck on the 4-year cycle and refuse to acknowledge macro side of things, refuse to acknowledge that that the weight of the vote on direction of bearish or bullishness from the macroeconomics is going to trump anything you see on a chart every time, all the time. The experts are baffled by it. So your thoughts, OC? If we had a growth economy like Bitcoin's always existed in until this cycle, where would Bitcoin be right now with all of this bullish sentiment? And if we are seeing this pullback on the flip side of that, with all the bad macro information, if we didn't have all this bullish stuff that's coming out on crypto, where would the price be at on the downside? I'd like to hear your opinion on that.
Oh, well, I don't know how to answer that. It will be a little bit difficult. I need a little bit more data, but there's two possibilities, and I'm going to be also pushing for my last stand right there. First, I think will be, which I don't think this is not going to be my final answer, by the way, it is that we will be much, much lower. Why? Because media is starting to prolong that, maybe for institutions to be able to dump. I mean, let me ask you, if you own a social media platform, right? And then you have experts, and you can tell those experts, you know what? I want this news, and this news to be put out there. You are not lying. That is correct, right? But still give the sentiment of bullishness. Well, then you can on your side you can sell, and then whenever the things doesn't hold and plummets, you have sold earlier, right? And the other one, it is right now we are, I would say that people do not have money on their pockets at this point. I believe that we are relying heavily on credit. All right. So that takes me to believe that they're trying to squeeze much of whoever is already in crypto to lose their whatever they converted from USD to crypto, so they can liquidate it or be liquidity for someone else, other than holding the market. Because I don't think the average American, the average Mexican, or the average Chinese people, right? China, I don't know, how do you call that? Chinese, right?
Chinese. Yep.
Chinese, right. And why do I call those? Because we are very next to America. America is one of the most heavily invested in that. And remember that we migrated mining from China. So crypto is still running on China, and they're heavily using it. All right. So I don't think that they have enough money on their pocket to keep buying in and sustaining that cycle. So I believe right now it's just happening as always happens, that media pushes hard at the end of the bull cycle. We saw that 2017. We saw that 2021. And I think we're seeing this right now. I'm not saying that this is the end of the cycle. I think this is the end of the first wave. I still believe that we need confirmation to call the end of the cycle. But absolutely, that is my last stance. I don't think that where would Bitcoin be? Slightly below, but slightly below. Maybe bouncing
slightly
out
below. I think
already.
if we didn't have this bullish info, honestly, I think if we did not have the bullish info that's came out, we'd be looking at 67,000 right now. My point of control.
Really? You think?
Yep.
Wow. I would say that I will be somewhere around 70, yeah, no lower than 70, I would say.
Okay, well, 67.5 to 70,000 is not that big of a difference, but yeah, that's what I'm thinking that we'd be at right now. And I think that if we had a good macro environment, we had a growth economy, I think that Bitcoin right now would be breaking 125 easily. So it is what it is, man. You know, a lot of people, I'm hoping that don't get caught at the top. If Crux, I talked about Crux's post earlier this week where he said, hey, look, if you haven't sold already, now it's time to focus on the DCA. And that's why in our Discord, we have the Piper plan, which is a dollar cost averaging plan. Even if you started at the top in November 2021, you would have been in a lot of profit. And so we do the DCA plan. It's a Piper plan. You can get the Bitcoin one, just for being a member right here on our YouTube. It gets you access to that. And it's got a take profit plan at the back end of it, which is a different thing than most people talk about. Everyone tells you the DCA. No one gives you a plan on how to get out of the markets. And we do both of them over there in our Piper Academy Discord. But let's head out of here, OC. You got a class to go to. I'm going to go ahead and let you pop out over there. I appreciate you joining me today. And we'll see you back here tomorrow. Everyone drop an OC in the chat for my man there as he goes over to do his class. And then I'll drop over here and walk you guys out. Bitcoin currently at 81,988 right now, continuing to profit move there. But guys, we're about to head over to Crypto Blood. So when we get over there, you guys make sure you drop your graduation caps. Let them know that you came from the Piper Academy. We appreciate everyone that has joined us here today. We're going to be back here tomorrow morning doing the same thing again, looking at that new data that as it comes out and helping you guys navigate this crazy clown marketplace that we call crypto, guys. Until then, trade safe. And as always, be like Alex O and use some risk management. I appreciate all of you guys. Much love. Catch you guys tomorrow. Peace.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels fall low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, from a Mexican spaghetti. Yo, crunch crypto with a deep dive to reject dime. And if you like the visual powered by Tar Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels fall low. Sound off.
To get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude.